What's going on, guys? It's Lewis here with Crypto Elite, and it is time for another market update for the week of June 20th. Now, there are a couple things I want to go over in this video. Firstly, I want to go over something that I just saw, and I saw a TikTok about this. It was a Reddit post that said that if you invested into the top 10 coins, that you actually had a better shot at outperforming the coins from numbers 11 to 100. So if you invested into the top 10 coins in 2014 or 2015 or 2016 or 2017 or whatever, right? That would have, I believe, outperformed investing into an equal amount of cryptocurrencies or equal amount of dollars for the next 90 coins. And this is really interesting because everyone always says like, oh, there's moonshots. You know, you got to get the small microcap moonshot coins to really do really well. And yeah, there's definitely some truth to that, but that's like, you have to think of the risk that you're taking on versus simply like getting into the higher market cap coins that are much more secure. I mean, Ethereum did over a 40x last cycle, right? Ethereum, the number 2 coin, it did a 40x. That was, I know there were some coins that did 100x, right? But I'm just saying that you have to not necessarily completely avoid the small cap coins, but be careful with them in these type of conditions. And I definitely would partition a lot of my, or allocate a lot of my capital more towards Bitcoin, at least now, and maybe some Ethereum now. And then once things start stabilizing a little bit, or maybe when we not when we get into a bull market, because by that time you'll miss out on a lot of gains. But basically, the point is, don't put a lot of money. Putting a lot of money, a lot of your capital into super micro cap coins is a little risky or very risky, and you might be better off actually just averaging into Bitcoin and Ethereum and stuff, because the coins that you know, like there's a couple coins that you know will do really well and will stick around and come back. A lot of these micro caps, you don't know for sure if they're going to come back or not. So just be very, very careful and have a lot of conviction in whatever you're holding, because they might not come back, and be okay with losing the money that you put into them. That's number one. Okay, number 2, big picture game plan. I want to go over my big picture game plan with you. Okay, and honestly, I'm just going to read this from the VIP chat because why not? I don't want to have to remember all this, but this is pretty much the game plan in case you want the rundown right away. First off, we're still in a downtrend and the overall market economy is bearish. You have to understand that. We're basically in a recession right now, and things are most likely not going to get better until later this year. I don't expect any new all-time highs this year. I expect new lows. I don't think 17,578 was the bottom. Equities are risky, and if the overall stock market is risky, then crypto is definitely risky. During the bull run, the Fed was printing money through quantitative easing. Now they're doing the exact opposite with quantitative tightening. People simply don't have money. They can't buy. And that's something that is needed in order for there to be a bull run. The bottom won't happen with one candle. That's also something really important to remember, because I think a lot of people think there's just going to be one giant candle to the bottom and that's going to be it. But typically bottoms, they have a giant candle down and then a period of consolidation or accumulation, really, for the whales to accumulate over, a span of a couple weeks or a couple months before the up move really happens. The only time people are just conditioned, especially because they're new, that down, the market reverses in a V shape because of COVID, but that typically isn't the case. And I don't think that that's going to be the case here. So I do think that the bottom will be prolonged and probably not happen for a while. So with saying that though, there is still upside potential that you could catch. And you could catch these upside potential bounces And the best thing to do, in my opinion, is to slowly dollar cost average into Bitcoin, Ethereum, and alts. Although, like I mentioned in the beginning, a lot less into alts, with the expectation that you might be doing that for years or years before we get another run. And then just play level to level for your trades. So I always mention this all the time. I have a trading account and I have an investment account. So in my investment account, I am averaging into different coins. And in my trading account, I play level to level. And like, that's it. And then that's pretty much it. So let me see. Where was I? I was saying that there will be some insanely good buying opportunities over the next year. So don't feel like you missed out on everything, because there's definitely going to be some good buying opportunities for potentially generational wealth over the next, year or so. Number 2, Bitcoin has fallen 75% since the top. In my opinion, you'd be a fool not to at least slowly stack in. I'm putting in a small amount every single week into my investment account, and I don't plan on touching it until the next bull market. Alts have also fallen 80% plus. Alts are still risky. I am continuing to average into them, just not as frequent or with as much money. At this point, because we've fallen so far, I don't think it is the time to aggressively short. Now is the time to think about buying opportunities and to be patient with shorts, okay? But when the shorting opportunities come, I definitely want to take them. So I probably wouldn't really want to be shorting heavy until we reach 27,000. If we do reach there, maybe I'll probably put on a big short at 25 as well with a stop loss. But I don't want to short right now, because 20,000 is such a big psychological number that you're really shorting very close to a big number that is very, very important and possibly a really big support. It's been holding up above 20K for quite a while now. We had a dip below it and then a reclaim of that level, which is bullish. So honestly, we might see a bounce up to 22, possibly even 25. And if we get the bounce all the way up to 27, to 29, the previous support of the last basically phase of range, then that's a great shorting opportunity. And I'll show you that in the charts in a minute. So I just want to mention this, that even though the situation is bleak, there's still a lot of opportunities to long bounces. And like I just mentioned, we might actually have that opportunity right now across the 20K level. And if we fall back below it, then things could be pretty shaky. And I don't know, maybe we'll probably see 17 again and 17K again, and possibly even 14. And if we see 14, it's possible that miners will start selling off in droves and the price might dip down to 12 or maybe even below. Bitcoin has never been in this environment before, this macroeconomic environment where it's basically a recession. Bitcoin's entire history has been nothing but up only in everything, right? So we've had it extremely easy. Even in 2018 and 2019 and 2020, the beginning of 2020, when everything was going down, it still was, in the real world, a really good time, because everything was basically going up in the real world. All the stocks were going up consistently. Real estate was doing really well. Real estate did extraordinarily well in 2021, last year, and 2020. But even, buying anything in 2018, 2019, other than crypto, was actually really, really smart, especially weed stocks. If you were able to get into that cycle, ride that to the top, sell it, then you just would be a freaking billionaire. So anyway, that's the big picture. Now, what I'm going to do is I'm going to go do my regular market update. And then after I get finished with Bitcoin and Ethereum, I'm going to go over the charts that I posted in here. So I posted a whole lot of charts. All of these are charts that I posted, and I want to pretty much make sure that I have all of these set in my trading software that I use, 3 commas, so that in case any of these coins do reach their levels when I'm sleeping or when I'm away from my keyboard, that I'll actually get into them. And that's super important because I can't be in front of my computer 24/7, and I doubt you can either or even want to. It's not healthy. So using something like 3 commas can make sure that you have your orders in without needing to be in front of your computer and, having to, be there. So let's get to it. All right. So first things first, Cbpi Index. We're going to start off with this. Okay. So the Cbpi Index is at a 14. Let's bring it back down here. So very, very low. It's at the low where it was. It was at a 13 back in March at the March lows, and it was at a 12 at the lows of 20,000, or excuse me, when it was under 20,000, when it dipped under 20,000, it was at a 12. So it correlates with this back here. And if this is this is a pretty pivotal point right here as well on the Cbpi Index. And so it seems like 12, 13, 14, 15, these are all really key levels. Like this back here, 14, 15, was a resistance before it fell back down and then came back up in 2011. And then back in 2015, 14, 15 was a big resistance because it fell well underneath of it, came back up, 14, 15, fell back down again, 14, 15, fell back down again. Let's see if back here, I guess this one was sort of up to 19. So there's a lot more momentum up here, but we did have a little bit of a range period right here in 2019. And then finally, obviously 2016 was 13, 14. That was the bottom. And now we're back here again. So this is a bullish, it's not bullish, but it's a support, and it is under 15, which is a buy zone for me. And so according to this, I definitely want to be stacking into Bitcoin because these levels, once this, goes under 15 for me personally, that's when I start to buy Bitcoin. Especially for my longer term investments, because I think that it's historically a good indicator. Even though, as you see over here, this was at $15, when it was at 4,600, and it fell all the way down to 3,200. So, it fell 40%, and it's still, but it was still a good buy. But that's exactly why I'm not going to be going all in, but I'm dollar cost averaging. Anyway, I think you get the point. Next up, we don't need to use that because that's the Pi cycle top indicator. We have the MVRVZ score. This finally, this reached the green zone, the green buy zone. So this is another, area. This is another indicator. It reached the green buy zone. So to me, that's an automatic buy. So this gives me more confidence that averaging in these levels and as it continues to go down is the smart decision. Okay. So that's what I want to do. That's exactly what I'm doing. I'm averaging into Bitcoin at these levels. All right. So that's the MVRVZ score. Then we have the R hodl ratio. The R hodl ratio has not hit the green yet. So we have good news with we have basically, I want to go in thanks to Cbbi. I want to go in thanks to the MVRVZ, and with the R hodl, it's not there yet. So this is basically not telling me anything. It's getting close, but it's not telling me anything. Then we have basically a fire sale in the rainbow chart, and I like this chart. I do like this chart, and I use it. This came out sort of like a meme, but I actually think that a lot of people use it, and Doge came out as a meme, and look what happened with Doge. So the culture of the internet takes things that might start out as memes, and then they expand upon them and they use them. So that's why I use this. So this is also obviously telling me that it's a really good buying opportunity, and I want to go into it. Now, the thing is, originally I said that if this is basically a fire sale, originally I said if all of these different indicators, all 4 of these, and then also the fear and greed index, which is currently at a 9, if all of them lined up, then I would go all in. This one hasn't, though. Our hurdle ratio hasn't, so I'm not going to go all in. But also, when I said that, I don't think I was saying that with the thought that we were going to be in a recession, or that we were going to be at a place globally, economically, that was this bad, because there's still a lot more room to the downside. And I think that the stock market has crashed significantly and can still go down a lot more. And crypto has crashed significantly, and I think crypto could go down a lot more. And I think that the housing market is slowing down. And the people that were selling their houses that used to get 20 cash bids, 20 cash offers above asking price as soon as they put it on the market and sold their houses within a few days, now houses are on the market for weeks at a time. And not only are they on the market for weeks at a time, but they're actually lowering their prices for the first time in years. They started lowering their prices for houses and condos last month or 2 months ago for the first time in years, okay? Not only that, but instead of having, 20 people with cash offers, there might be like 3 or 4, and they're not above asking price. People are trying to get out. Also, exotics, like exotic cars and things like that, when there used to be 2 of them on the market, now there's, 8 or 20 or 10, on the market. So there's a lot more supply becoming available than the demand. And people say in the housing market that the housing market is different because there's so much demand and there's so little supply. Okay, there is until there isn't. That's my rebuttal about that. There is until there isn't. And we are seeing that even if the supply is there, or the supply is limited, the demand is going down. The demand has to go down, because with interest rates going up so much, before, when you could get a house for 3% interest and now you have to pay 6 or 7% interest, that cuts the demand by minimum 20%. And it's going to keep on going up. The interest rates are going to continue going up, which is going to cut into the demand even more. So if the demand continues to get lower and lower and lower, the supply will go higher and higher and higher, okay? Because that's literally the way things work, unless BlackRock or hedge funds or giant companies come in and just buy it all up in cash. But realistically, there's so many houses. It's not like hedge funds and BlackRock and big organizations and companies like that could simply, in Zillow or Redfin, could just buy up every single house in America. There's millions of houses. They don't have enough money for that. You think they do, but no, they're not going to spend all of their money on buying up every single house in America. Like, that would be incredibly stupid on their part. So opportunities are coming. Personally, I sold, or I pulled out of my contract for the house that I was going to buy. I put a deposit down on it. It was a condo in Brickell, and it was awesome. But I pulled out of it because I wanted more money to buy Bitcoin at the lows, to be honest, or buy Bitcoin or to stack sats. And yeah, I mean, that's just me, but I would not buy a house right now. I definitely wouldn't buy a house. I think the best thing to do when it comes to houses is to wait until they continue to go down in price, or until they go down in price even more, like a lot more, and then either buy it cash if you can, or if you can, get what's known as a FHA loan, which is a lower interest rate for new home buyers. So you could do that, buy a duplex or possibly a quadplex, and rent out the other rooms. use the rent from the rooms to pay your mortgage. And yeah, that's going to be it. So that is the plan for the real estate market. That was completely, not the point of this video, but whatever. I go on rants. It's like midnight. So fear and greed index is 9. This is also really good. Basically everything is telling me I want to be averaging into Bitcoin. That's all that. That's literally what all of these fundamental indicators are saying. It's like now I want to be greedy, not greedy. Now I want to be averaging into Bitcoin and a little bit into alts, but not that much because I think alts could still fall a lot more. Okay, so now that we got the fundamental stuff out of the way, what I want to go over are the actual charts. So the first thing that I want to go over is simply the top to bottom percentages that we have seen in the past and where we are now. As you can see, back in 2010, 2011, 2012, really 2011, we had the Mt. Gox hack and Silk Road. I don't know why I said Slick Road. It's Silk Road. Anyway, or maybe it is Slick Road. I don't know. Regardless, we had 93% drop from top to bottom. Okay. Back here in 2014, we had the block size war, or excuse me, I guess 2015 no, it was 2014. Yeah. We had a block size war, and this was a drop of 87%, right? Then over here, we had the BitConnect scandal, and obviously just like such an insane run up, and it was all over the news. And I think the big banks and institutions did not get in, so they wanted to get in. So they dropped the price, and I'm pretty sure that's what happened. That's my theory about it, at least. Anyway, 84%, and now we're at minus 70%. And, it's really like, okay, it's not, so 84, 87, 93, and we're at 70. Looks like we have more downside to go when it comes to percentages from top to bottom. Plus, right here, economy was doing really well. Markets were going up except for crypto. Here, economy was doing really well. Market was going up except for crypto. Same thing right here. So now here, markets are not doing well. Markets are going down and crypto's going down. So risk off is the way to be. Anyway, that is that. Now let's go to the actual charts. Okay, so we're going to start off on the total market cap. Now, as you can see, the total market cap has almost touched the 78.6% slash the 2018 highs in January slash the 2020 close. And this is a very important level in my opinion. However, if you zoom in, let's go to the weekly just so you could see it a little bit better. It actually did not touch it. So it came real close and then scooted back up. So I honestly think that it needs to touch it. Maybe it got front ran, but to me, I would much rather go in if it touches it versus now. But with saying that, there are long setups. So basically, it might be a local, in my opinion, it might be a local bottom and you could take long trades, but you have to use really good risk management here. And I favor the longs, but I would rather, I was trying to get in down here, but we reversed. So now you have to think, okay, well, it came so close, is at the bottom, but a lot of times comes close, goes back up, tricks people, they FOMO long, and then it drops back down. So that's an issue that we really need to keep in mind. We're saying that you could see there's a huge bullish divergence on the weekly of the MACD, which is like usually a really good sign. And these are oversold to the max, so that's not really that good, to be honest. You want to see like a quick bounce, quick bounces. But still, it's close to here. It's close enough. So I just explained it. Regardless, the real thing to look at for is in case it comes back up to this level. This is clearly the area to short. Also, let's see here. If that is the bottom, then what I will do is this, and then probably short. Honestly, I'd probably short right underneath the 1 trillion mark, because that's the 23.6. I'd either short there. Yeah, I'd probably short. I'd probably look for shorts in this area right here. So that's only if this was the bottom. For now, I don't think I'm not convinced, but I wouldn't mind going long depending on what I see. So let's look at the total 2 now. So total 2, okay. What am I looking at here? Why is this line drawn like this? I'm trying to figure this out. Maybe if I go to the 12th month right here. No, I'm not really seeing what this line was for. So let me delete that. Okay. Maybe it was on the log chart or something. But regardless, everything that's not Bitcoin. Everything. So the market cap hit the 200 weekly moving average and then bounced up, even though the Bitcoin itself fell underneath of it and Ethereum fell underneath of it. The total market cap did not. So that's pretty good news. Let's see where the Fibonacci lies on here. From bottom to top. Same thing. We didn't really hit the... Yeah, we really didn't hit the 78.6. And maybe, is this a monthly level as well? Well, yeah, the monthly level is down here. So this is the top. For the monthly, it's not too much going on. Like right here on the monthly, it's just like whatever. On the weekly, it obviously 200-day moving average, and then you can see this is the top right here. So I could see why there's a bounce here, but I would love to have it seen come down to that 78.6. Really tap that. That would have been great. Regardless, if it reaches down here or down here, these are better longing opportunities in my opinion. So I'll have to look and see what the actual charts are saying. Maybe let's go down to the daily though. Yeah, and let's go back to the total and just go to the daily as well. One thing that I do like about the daily chart is these 2 candles right here, followed by this green candle. Okay? That is a bullish formation. That's a bullish candle formation. It's both a engulfing, bullish engulfing candle and a tweezer bottom. So that's pretty bullish, that is fairly bullish. And we're sort of seeing this, well, not sort of, we're seeing this on the actual coins itself. So there's more room for being bullish than there is for being bearish right now, in my opinion. Okay, so let's go to the market cap. We don't really need to go over. Well, I'll try Bitcoin and Ethereum just to see if there's anything significant. Yeah, I don't really see anything significant there. It hasn't even reached. Both Bitcoin and Ethereum have not even reached their previous yearly closes or opens. The market cap of ETH looks like it reached its previous monthly open, so that's a level for sure. And then let's see here, go down to the weekly, see if there's anything that we could say. This was the weekly, so that's pretty good. That's pretty good that it's above the weekly highs of the market cap for Ethereum. So this sort of is a buy zone right here, strictly for the fact that it was the highs of the previous cycle back into the 2018. And that's for Ethereum. So I do like that. It's not bad. It's pretty good. And these are the market caps. So let's go into the dominance levels now, which is a little concerning. Okay, so now we're at the dominance levels, and this is the most concerning thing for me right now. It's the fact that if you see, we are in the middle between this huge range. There's the resistance, there's the support. The altcoin dominance really really reflects the market, because you can see, you know, we've been going down, 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 and the dominance level has been going down, 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 down. And then last week we had a jump up, and the market, you know, jumped up as well. Now we're in the midline between the support and the resistance. So typically this is like not really a buy zone. Down here is a buy zone for me, but here is not. However, looking at the daily chart, you could see that we had a bearish candle, very bearish candle, right? And now we're having closes that are pretty good, that are pretty bullish. Like this candle right here should have been red. And if this wasn't red, then this should have been red. And maybe it will be red, but honestly, if we close below here, then I will get out of my, let me write this down actually. If we close below here, get out of everything. So, and shorts. So it's basically like this. All right. Because if we close below here, then this is going to be SFP, and that's not going to be good. And then we'll probably do what I drew out a long time ago and then fall back down here. Or not a long time ago. I drew that like, I don't know, last week or something. And then fall back down here. So this is really important. Okay, so there's that. And then let's look at Bitcoin dominance, literally the inverse of it. So if Bitcoin dominance comes back up here, then this will be basically a swing failure pattern underneath this level. And then if it goes back up, then, you know, that's really, that's going to be bad. So we have all of that done, and I have my alerts set for it. Next up, let's look at the dollar. All right, so that's not really that good. Unlike the fact that, I guess it's good that it didn't close above here. Like it closed below it and then it went above it, but now it's still, there's 3 days to go. So, and it's falling back down. So it might actually fall back below it. Well, it has fallen back below the high again. And then that might be somewhat bullish for crypto, because the dollar, every time the dollar goes down, crypto has a bull run. Obviously, I don't think that crypto is going to have a bull run right now, but this is not looking that good, because this is a humongous consolidation period from 2015, right? Just like up and down and up and down and up. And it looks to me like we just broke it. So like to the upside. And this is like sort of like Bitcoin between 27 and 26, 27 and 32, 33. Like this was a huge consolidation period for months, right? And then it broke to the downside. And when it broke pretty aggressively. And then same thing down here. Big consolidation period, broke to the downside, broke pretty aggressively. And so the dollar, had a huge consolidation period, and now it broke to the upside. So that might not be too good, because now it's no longer in this range. Now it's in this range. And if it's in this range, then you could basically get the midpoint probably right around there, and then you could say it might do something like this, and who knows, it could come down there, or it could come back up here, and you don't know, right? Or it could fall back down. Those are the two options. And but it's more likely now that it's in this range to come back up, especially with the whole way the world is moving right now. You know, people are moving into cash. Like, hate to say it, but cash is king right now. It's like, choose your poison. Do you want to lose to 12% interest, inflation every single year when you're holding cash? Do you want to hold crypto and possibly lose 90% of the value or 50% plus? Do you want to hold stocks and possibly lose 50% plus? Do you want to hold real estate with this impending, you know, real estate market crash? It's crazy. It's crazy. So that is the DXY. Now let's look at the actual stock market. Let's start off on the Nasdaq. Same thing for Nasdaq. Okay, like this was pretty big support, crashed heavy underneath of it. That's not good. Like, that's literally not good at all. And so if it ever comes back up here, I would want to sell it all. And honestly, at this point, oops. Oh shit, is UOS doing something? Hold on a second. Let me check this. Where were we? NDX, right? Yeah, this is the game plan. If it comes back up here, sell everything. And if you want to be more, possibly be more aggressive, possibly sell everything here with if this comes out. I'll look for shorting opportunities here. Okay, so this is the game plan for NDX. Yeah, it might want to sell if it pops back up here, which, you know, doesn't seem that much, but for the stock market, it is sort of a lot. And next we have the SPY, so, you know, the S&P 500. And this, obviously, this is the yearly chart. The yearly chart is down astronomically this year. Really bad. The 12-month chart is, I mean, the monthly chart, 9 days to go, but it's going to close underneath this huge line. So obviously the weekly chart will as well. And that's really bad. This was a key pivot point right here for the S&P 500, and it just gapped down. So I don't want, like, let me actually make sure that I want to sell if it comes up there. So let me write this here. Sell if it comes, touches this line. Yeah, that's exactly what I'm going to do. Actually, I'm going to put it right here. And this is going to be red because this is a sell zone. Totally, 100%. Because now you have this support / resistance right here, you know, one there and a couple there. And you have this huge diagonal line. So if it pops back up to this area, this is a big shorting opportunity. So definitely want to point that out. Maybe I could turn this yellow or something. That might work. And then hopefully, and then what I'll do is I'll point down there. This is where I would want to, you know, go long. So let me say this. I would pretty much want to long everything here, because this is the 61.8 of this move, right? And we're going to get I would assume that we would get a bounce off of here, because not only is it 61.8, but you could see obviously big support here, resistance now, support here. So lots of confluence, and this is the area where I would really want to be looking to long. And the crypto market is correlated with the stock market, and the S&P 500 is the, you know, biggest part of the stock market. So it's what everyone uses. So yeah, I definitely want to correlate my crypto holdings with the stocks. Okay, so now let's actually move on to Bitcoin. So this is basically Bitcoin since the beginning, and you could see that this was the weekly high at 19. It was basically the high. It was the top of 2018. I've mentioned this before. And then we have this little area right here, which was some confluence. And it fell right below. It fell below it, but then immediately, or the following week, went above it. If we go to the daily chart, you could see it clearly. And honestly, I feel like that's a good buy. And simply, you know, doing something like this isn't a bad decision. Even you know, waiting for a little bit of a move down and possibly even doing something like this isn't the worst. So I could see a move up to you know, 22,500 basically. And that's possible, but this isn't this chart I don't really like to use for those short-term predictions. But yeah, I mean, it is what it is. We ran the highs, we ran the 200 EMA, and then 200 weekly MA, and then we went back above it. That's the SFP. So I do sort of like that. Now let's look at the chart that I use for like my trades and stuff like that. Okay, so two things that I want to say. Firstly, if you go back to 2014, top to bottom, it was 406 days from the cycle top to the cycle bottom, okay? Then if you go from the 2018 top to the bottom, it was 364 days from the cycle top to the cycle bottom. And if we bring that to the 406 days, then it's, you know, not too far off from the cycle bottom, right? So let's just say 406 days. Well, the sad thing is that we're only 224 days. So we're just over halfway from how long it took the previous two cycles to get to the bottom. And if we bring this and extend this out to 406 days, then that brings us to right around December 2022, December 12th, 2022. Yeah, so December 12th, 400 days, based off previous lengths from top to bottom, maybe the bottom will be somewhere around here. Just a heads up. Also, something very cool that I just noticed was that the number of days from the previous bottom, so this is the bottom of 2012, right, all the way to the halving, so this is the halving that occurred in 2012. So this was 2011 bottom. So from the 2011 bottom to the next halving was 364 days. Okay, that's equal to the number of days from the halving to the next top. So from here, 364 days to the next top, just about 364 days, you know, a few days off. Then we had the big crash, you know, in 2013. From 2013 down here to the bottom, you take the bottom to the next halving, that was 539 days. All right. Then you take the halving and you expand that 539 days. That was pretty much the top. Okay. So then in 2018, so then we had the big crash, and you look at the bottom from the 2019 to the next halving, and the next halving happened in May of 2020. And then you take from May 2020 to October 2021, which was 504 days, the same amount. And that basically called the top. The top was 1 month later, but it wasn't. It was 1 month later, but it was very close to the same price where it was October 4th. So, or maybe it wasn't actually. So October 4th, let me go back here, was June, July, October. So October 4th, Bitcoin, actually, yeah, never mind. Bitcoin was $48,000. Yeah, 48,000. And you would have missed out on a 40% gain. So yeah, it's not the most accurate, like in terms of like you would have missed out on some gains right here. However, definitely starting to scale out. I'd probably want to sell like a certain amount of my position from the bottom to the top. So I'm gonna like copy this actually. Whenever there's another bottom, I'm going to extrapolate that out to the halving, and then I guess take the halving. I'm gonna do exactly what this is, and then I'm gonna take 20% off the table and just go into cash or something like that. We'll see what happens. But this is like years down the road. So, which is what you should be doing. You should be planning for years down the road. You know, that's how to be successful. And anyway, let's go back to this. Going back to this, obviously, MACD looks pretty good with the divergence play over there, just like all the other ones. And like I mentioned before, we had the wick below. On the market cap, we had the wick below and then above. But on Bitcoin, we had the wick below and then basically a wick below the 20K mark, and now it looks like it's rising above it. So for this one, the 200 weekly moving average is actually a resistance at this point. And so I marked that out, and that's about $22,400. I think if we go down, we could go down here to make it a little bit more clearer. So this was the third major support. Like I just mentioned, going into the daily chart. Yeah, I mean, that's a buy. This is a buy. I think that if it is bullish, then it won't fall back down below 19.573, and you could use this as your basically trade. 22.350. 22.350. What is this? 22.350. So somewhere right around here. Maybe if we go to the 4-hour, you get a little better positioning on the 4-hour, because this is the resistance after all, so you don't want to buy like right now. But yeah, 22.350. This is a possible trade setup. It's not the best RR. You know, you could actually probably raise this up, to be honest. And then, because this looks like to be some major lower high, higher low, higher low. It should get a higher low. So you could actually raise this up all the way to here. Actually, you could raise it up to here with a 4-hour. Yeah, that's not a bad trade. That's honestly not a bad trade. You know, 2R, higher low, higher low. This should be a higher low. So I would put this trade on with a stop loss timeout of 4 hours, because that's the hourly chart that I'm on, the 4 hours. And that way it should not close underneath here. If it closes underneath here, like if it closes underneath here, then that's bearish, because it's a full-on close, you know, underneath here. If it wicks underneath here, that's fine. But if it's a close underneath here, I don't like it. And so that's going to be Bitcoin. So now that we got Bitcoin out of the way, let's go on to, well, actually, wait, let me just, you know, go a little bit higher. I'll say this. I think that Bitcoin, you know, this is obviously this is the low. 1, 2, 3 bounces off the low, a little consolidation right above it, and then slam down. Okay. So this was the low. Slammed down, reclaimed it up here, doubly reclaiming it. It looks good to me. So what's the first area of take profit? Well, somewhere up here, somewhere in this general area, right? And then the second, really, up to 25K, it looks like. Let me try going out a little bit. Yeah, you could do this. This is a possibility. Okay. So absolutely take profits here. Okay. This is no longer green. This should no longer be green. This was the golden ratio, no longer the golden ratio. But yeah, this is where I would definitely want to be taking profits. Would be 26,000, 2590 something, 2589, something like that. Yeah. All right, so this is going to be my take profit area for any spot positions that I have. And this is my trade setup. Hopefully we don't just like wick. Well, I mean, we don't just like shoot all the way up, but you know, it is what it is. So we got that. That's Bitcoin. Let's look at ETH though. Maybe there's something for ETH. ETH looks like Bitcoin, but before it went up. So ETH, there's more. ETH did the same exact thing, obviously, like everything's correlated, but there's the 1,000 mark. And let's go to the weekly. Let's go to the monthly, actually. Start off on the monthly. Yeah, nothing with ETH. Why? I think, okay, so it's Bitcoin came down to the 2017 highs. Where is this? Here we go. Bitcoin came down to this level. Ethereum, though, monthly highs right here. Monthly high right there. Weekly. Let's go to the weekly. Weekly highs right there. I guess this is one spot, but it's not. I guess the spot where it did bounce off of was better because it had this confluence as well as this one. I bet a lot of people longed it up here at 1,400 and then they got wiped out. And then the next long was probably, 1,200 and then they got wiped out. And then now the long is above 1,000. So yeah, to me, let me draw this out here like this. This is the buy zone. So we got that, but to be honest, I like using Fibonacci, and this is the 88%. So I would much rather have this zone right here, $684 zone, be the area where I would really want a long. And then of course you have this down here, just in case we get there, $429. But yeah, it's the same thing that happened with Bitcoin is happening with ETH. This is a bullish engulfing candle at the lows. Like usually there's upside potential. So let's look for shorting opportunities right here. Shorting opportunity 1,700. Bring it down a little bit. Maybe look left. Well, nothing really here. Obviously, also 1247. So these two areas. In fact, I should probably do this on the ETH perp. But yeah, let me do this. This is the first one. This is the second, and then this is the second one. So do this. Let's go to the 4-hour chart. Get more clarity, more granularity, I want to say. This is the biggest shorting area right here. So make it red. And then make it red. Okay. So yeah, let's say that it does come up here. You want to be short. So I'm going to be shorting it, this entire area. Okay. Absolutely. Then what we're going to do, so this is the sell / short. This is a definite short. And as for longs, let's go into the hourly. I have to start going to the hourly now because the 4 hours not really giving it to me. So we get the high, we got the reclaim, higher low, reclaim again, higher low, high, higher high, and then this right here, perfect retest right there, 1250, and then we shot up. I believe I gave this out in the VIP the other day, which is great. Hopefully people got in on that. And the target is, I believe, 1218. So this is the target right here. Yeah, this is, I mean, I would say that this is a pretty good shorting opportunity right here. I would love to see a move like this. So you would say, where's the text? Look for the reclaim. Look for the breakout, then not reclaim of the low, then breakdown below, and you want to and short the retouch of the top, I guess. Yeah. So that's basically it right there. Hopefully it does something like this, you know, up, then down, then, you know, that's what I'm looking for. And then I would probably target the midline between here and here. I'd probably target right around here, and that would be the target, hopefully. And then after that, you know, we have the potential for what's next right there, 1425, and then the obvious shorting zone right there. So lots of opportunity for ETH, 100%. Let me go to the, I will go to the 4 hour to try to make this a little bit more clear. Make this like, put this here. Okay. Boom. If it comes back up, actually, yeah. And then what happens is if it comes up, comes back down, and then goes back up again, then if it goes above, below, above again, get in on a retouch of support. Yeah, that makes more sense. Cool. Okay, so we got this and we got this. Two scenarios to play out. If it does this, then I target here. If it does this, then I target here. Okay, so now I'm gonna go to Solana because this is the one that's really a lot of people are talking about. And I plotted out a few levels here. This obvious resistance up here where I would absolutely be shorting. And then we have this resistance right here and this support down here. So this was actually my buy, and it never got hit because it was front ran over at, I guess, 25.71, and my buy was 24.52. So that was unfortunate. And I'm just wondering if I'm thinking that it's going to do something like this and then that, and then, you know, come back down like this. This is what I think Solana is going to do, because it's like, yeah, this definitely actually looking left right here. This makes me even more thinking that this is what it's going to do. like trap late longs and then nuke it. Let me go into the 4-hour to see what the deal is, because with Solana, it's not the same as Bitcoin and Ethereum. With Bitcoin and Ethereum, like this level was like this was for Ethereum $1,000, right? And this was for Bitcoin 20,000, and we did that. For Solana, go to the daily, look left. What is this level? I guess the only thing that you could really do is say that it was that low, but that's not even it. Like this is it. Like this is the low. So I don't. Yeah, it just doesn't make sense that it's front ran. I don't trust it. I think it's some BS, to be honest. And this right here, this is a 38.2, so it's probably gonna drop from here. I'm assuming it's gonna drop. Oops, sorry, from right here. So let me do this. I have to I'm gonna have to redo it. I think something like this will happen. Yeah, I think that something like that will happen. So what I would do if I am going to put on a long position, so I would put on a long like this. So daily, go down to the 4-hour, bring it over here. Yeah, I would do something like this for Solana, to be honest. Maybe even bring it up a little. Yeah. Because this, I could see like a scam wick down here, followed by a big move up, followed by, or maybe not even a scam wick, just like a move down here, just sort of like this playing out pretty much. Yeah. Unless it just, could just continue to go up. And then if it goes up to here, this is resistance, but also on the lower time frame, this is resistance. So let me go back up to the daily, right? Daily. It's a tough one. There's a lot. I mean, there's so many pivots right here. Pivot here, like top, bottom, top, bottom, top, bottom, top. So which one do you choose? That's the question. That's the real question. This is definitely shorting opportunity. I know that. Well, I'll say short. This is the weekly resistance right here. I'd say that this is the biggest one for sure. Solana is difficult. I want to pick it up down here. Solana is a little scary, but this is a play. This is definitely a play for Solana. Okay, and now another coin that I want to look at is Cardano, because Cardano is supposed to have a really big update coming up soon. So I think that getting in somewhere around 38 cents would be phenomenal, because this is a very good area in terms of previous support resistance, just consolidation. So I would love to be able to get in right around here within this zone. And so I'm gonna put my buy here, and I'm going to start stacking in this area, and then look for sells, look for where I'm going to sell. And one other thing is that I'll look for shorts, and I really like this area for shorts. So this is where I'm going to look for shorts for Cardano in case it happens to jump up here. This would be a great area for shorts. Let me just see if there's confluence with the Fibonacci. 50%. So this is where the 50% is. I would much rather do it up here, but I'd probably look for shorts here. I'd probably look for something like this, or up here, look for something like that in this at the 61.8 up here as well. One of these two things would have to happen. So either way, I will be shorting Cardano when it comes up to these levels, or I'll be longing it if it comes down here. I'm not very comfortable getting in yet because I usually see these wicks get filled. So that's what I want to see. I want to see this wick get filled before I long it. And what I'm actually going to do now is I'm going to work on this bot that I really need to work on, that should theoretically, if I do it right, if I could get it done, by whenever the coin reaches the line. And so I do that right now. So the way I work right now is basically I have this line here, and this is at 38 cents. So what I do is I go into 3 commas, and I go into my trading software, and I put a buy order in for 38 cents right here. And then I put my sell for, let's say 43 cents, 43.9, 0.4397, something like that, and I'll put a buy order here, a sell order here, and a stop loss maybe down here, and I'll put my trade in, and that's fine. But what I want to do is actually make it so that I could buy a certain percent of of whatever is in my portfolio once it hits the line. So right now, if I'm in, let's say I have $100 in my account, or let's say I have $1,000 in my account, and I want to put $500. I want to put $500 into this trade. However, I put 3 other trades on before this gets hit for $600 total. Well, I have $1,000 in my account, and I want to put $500 into this trade, but I put $600 total into my other trades. I don't have $500 to put into this trade. So then what happens is by the time this hits here, I don't have enough money and it doesn't get filled. However, I think I have a solution to that, where I think I have a bot that can buy a certain percentage of my portfolio if it hits here. And that's what I'm going to try to trade up, because that way, if I have $1,000 and I want to put money into this trade, but I say I put $600 into other trades, then I could put a percentage that goes into this one. So at least I get filled something. And yeah, I'm going to work on that, see how that goes. And then I don't know, I guess I have a couple other things. Yeah, I'm not really looking to buy, like I mentioned in the beginning of this video, I'm not looking to buy long term because it's not ready yet. But I do need to definitely place my orders in for like the lows, like, for Aave, maybe for Compound. See, never mind. How about this? No. Wow, I guess Compound is not really doing anything. Okay, so never mind for Compound. I'm trying to find something. Algo. Yeah, Algo is probably a good one. I like Algo. So if Algo hits down here again, March 2020 levels, that could totally happen. So yeah, I need to point out levels to short, and I need to point out levels to long. So I'll have to go through all of these coins and figure out what the heck I'm planning on doing with all of them. So that is going to be the main thing. I'm going to go work on that bot now, see if I could get that up and running, and I will see y'all in the next video. All right. Stay safe out there. Bye.